By the end of this video, you're going to know the easiest way to become a full-time trader, even if you're starting as a complete beginner. This is the type of game that most people charge thousands of dollars for in their courses, but today, I'm going to give it to you for free. I'm going to walk you through how to read the charts, what platforms to use, a step-by-step tutorial of the easy strategy that completely changed my life. And I'm also going to show you how to use that strategy to finally start taking profitable trades using other people's money. Let's hop right into this. Now, first of all, what is day trading? In simple terms, we're simply buying or selling something in a short amount of time. You probably heard your parents or grandparents talking about buying stocks and holding on to it for years. That's not what we do. We are buying stocks or crypto or corn, really anything, and we're holding it for, it could be a couple of minutes to even just a couple of hours, and we're making our money every single day by doing that without us having to hold these stocks for years and years and years to make money. Now, another cool thing about day trading is that even if a stock is going down, we can actually make money. Even if a crypto is going down, no matter what we're trading, even if it's going down, we can make money. Versus if you just buy a stock and hold it like your grandparents probably used to do, you can only make money if the stock goes up. But as day traders, we make money no matter which way the market is going. But now that you understand exactly what day trading is, let me show you guys the tools that you're going to need. You only really need two. They're extremely simple and extremely easy. Let's hop right into this. So the first tool right here that you're going to need is called TradingView. Now, TradingView is simply where we go on and look at our charts. On here, we can look up anything. We can look up Bitcoin and it'll bring us the chart of Bitcoin. We can look up corn. It can bring us a chart of corn or the price of where corn is at. This is simply what us traders use to plan out our trades or see exactly what a stock or a crypto or whatever it is that we are day trading. This is what we do to see exactly what it's doing to help us predict what it's going to do next. Now, we don't really trade off of here, meaning we can't actually enter a buy. We can't buy anything straight through TradingView. We can't sell anything straight through TradingView. We have to use what's called a broker. A broker is where you would actually deposit your money into, and that's where you'd be able to actually place a buy or actually hop into trades to make money. And the broker that I personally use and I suggest is called Tradovate. So having TradingView and Tradovate is really all you need. You don't need any fancy computer. You don't need 100 million apps. You just need those two things. TradingView, which we'll go over in a little bit, and Tradovate, which is simply a broker where you'll sign up, create your account, and you're actually able to enter your trades on there. So in short, we're planning out our trades and drawing on our charts on TradingView. And then when we're ready to execute and actually enter a trade, we're going to Tradovate, and that's where we're actually entering our trade and executing on what we planned on TradingView. Now let's break down exactly what it is that we're looking at here. Now, looking at this as a beginner, you might be a little bit confused, but I promise you, this is much simpler than it seems. So these right here are called candlesticks. You see green ones, you see red ones. Red ones simply mean that price is going down. Green ones simply mean that price is going up. Now, these are all different shapes and sizes, and I'll get into showing you exactly what that means. But I remember when I first started off trading, a lot of people made it extremely complicated, way more complicated than it needed to be. It's pointless. It's so simple, so easy. All right, so let's break down exactly what these candlesticks mean because they're not as complicated as you think they are. So these are candlesticks, and each of these candlesticks represent exactly what's happened in a specific amount of time. Now you can choose what that time frame is by clicking on the top right corner or top left corner of TradingView. Now you'll see here 1M, 5M, 15M, 30M, 1H, 4H. Simply what this means is this is 1 minute time frame, 5 minute time frame, so on and so on. We have the 1 hour time frame, the 4 hour time frame, so on and so on. You can also pick the daily time frame. And all that means is that if I'm on the hourly time frame, each candlestick is showing me what's happened during the period of 1 hour. So let's assume that this right here is the 12 o'clock candlestick, right? Then this right here is the 1 o'clock candlestick, because let's say we're on the 1 hour time frame, which we are. This full candlestick right here is showing us exactly what's happened between 12 o'clock all the way up to 1 o'clock, because that's when one started, or that's when the next candlestick started. Then same thing continuing, this would show us all the price that's happened or all what price has done from 1 o'clock until 2 o'clock. And so on and so on and so on if we're on the hourly time frame. And how we read this and look at this, it might look intimidating, but it's very, very simple. On green candlesticks, we told you green means price is going up, red means price is going down. On green candlesticks, the bottom of the body, which is the thick part of this candlestick, that's where price started at. So at 12 o'clock on the dot, price was right here. at the end of this candlestick, so after 12 o'clock, at 1 o'clock on the dot, when this new candlestick started, the top of the body of a green candlestick, that's where price ended at. Now you might see these lines on the top of the bottom, the skinny lines. This is simply showing us where price has been throughout that candlestick. So although price started here at 12 o'clock and ended here at 1 o'clock, throughout 12 to 1, price had came up here, it was here, it was here, it had went down here, it had went up here, down here, all throughout the candlestick. That's what the wick is showing us. That's telling us during that time frame, price went all the way up here, it also went all the way down here. Now onto red candlesticks, it's vice versa. So on the body of a candlestick, of a red candlestick, the top of the body is where price started at, and the bottom of body of the candlestick is actually where price ended at. And that's extremely important because that shows us that we started up here and we sold down here. Now, when it comes to the wicks, which are the skinny lines, it works the exact same as green candlesticks. Wicks, or on this candlestick, we wicked up here, price went up here, price also went down here, price went down here, price was right here as well. And this is showing us all throughout this 1 o'clock candlestick in this example, that's what price has done. And that's simple. And that's why you'll see a bunch of different candlesticks. When we go back on the charts, you'll see there'll be a bunch of different shapes and sizes. Some will have long wicks, small bodies, small wicks, big bodies. It varies because it's showing us the story of what price has done throughout a certain period of time. But that's really all you need to know to be able to understand what candlesticks are. Now, looking at the candlestick is just one piece of the puzzle when it comes to understanding charts and understanding trading to be able to predict what price is going to do. So we never just see price just go straight up, right? We never just see price go straight up or straight down. When it comes to charts, no matter what you're trading, you could be trading stocks, you could be trading crypto, you could be trading Forex, no matter what it is, price is always going to go up, down a little bit, up, down a little bit, up, down a little bit. Then it'll go down, up a little bit, down, up a little bit, down, up a little bit, down, up a little bit. Now, this is very, very important to know because this will tie into the strategy that I use. It's a very, very simple strategy, but we need to understand this price movement first. And the reason why is because we have things called lower highs, lower lows, higher highs, and higher lows. Now, all that means is right here is a high point because we got to this point right here, and then we went down. Right here, we made another high point because we got all the way up here and then we went down. And here you see we made a low point, same way we made a low point right here. In this instance, this is called a high, this is called a low. This is called a higher high because this high is actually higher than this high. So this is a higher high than this high. Same thing vice versa with this low. We now have a higher low. So this low is higher than this low, right? And that's how we're able to tell that we're going to continue going up. So to continue this going on, we then have a high right here. Then we have a low. We have another high right here. But you see we created a high that's lower than this high. So this high is actually lower than this one. So this high is now a lower high. Same thing with the low. We have a low point right here. And then we have another low point right here. This low point is higher than this low point, which means that this low point right here now creates a lower low. So it's very, very simple. We have highs, we have lows, highs, lows, and we're looking at previous highs or previous lows to know if we're making higher highs or lower lows. And as I mentioned, it's extremely important that we understand that and know that simply for the fact that we always want to go where the market is going. We want to follow the trend meaning where market is trending to or where price is trending to, we want to also be going that same exact way. So when we're seeing higher highs and higher lows, like in this instance, we know we're going up. So we only want to look at buying that stock or that crypto, or whatever it is that we're trading. Now, if we're making lower lows and lower highs, that's telling us that price is going down. And we want to continue to go in the direction that the market is already going. So we want to only look for sell opportunities or opportunities to hop in sells. So now that you understand higher highs, higher lows, and candlesticks, there is something very important that you do need to understand and add to your arsenal as well. There are things called support and resistance. And simply all that means is usually price will go up, down, and range inside of a area. Right? So we see price went up here and went down here, went up here, went down here. Now we'll use these drawing boxes or these boxes here to mark off what we call resistance zones and we'll mark off support zones. And these zones are extremely important because it's basically telling us that every time price comes in this general area, it's going to sell down. This area is considered a resistance. All of our top zones, this is the top zone, is considered resistance. All of our bottom zones are considered support. So we know that usually when price gets in this general area, that price ends up selling down. Price gets to this area again, price ends up selling down. That's a resistance zone. That's very important. Now, vice versa, when it comes to support zones, we have an area where we see that price has rejected off of multiple times. We see every time price comes in this area, we end up buying up. Every time price comes in this area, we end up buying up. Now, this will tell us and give us areas of interest that will tell us when we should hop into a trade or not hop into a trade, because we know that when price gets in these general areas, we already know what it's most likely going to do. On resistance zones, it's most likely going to sell down. On support zones, it's most likely going to bounce off of it to the upside. But there are times when price breaks out of these resistance zones or these support zones, meaning that it doesn't bounce off of here. It just continues going up, right? And these leads me to the strategy that I trade. What ends up happening when price breaks out of these resistance zones or these support zones is that price will actually come down and treat this recent or what was once a resistance zone, it'll actually flip it and turn it into a support zone. So you see we broke above it. Most of the time, it'll come back down to retest. That's what we call it. It'll come back down to retest a previous resistance zone and actually treat it like support and end up buying off of it. Same thing when it comes to sells. So let's say we sold off of here and broke through a support zone. Most of the time, price will come back up and treat that previous support zone as a resistance zone and sell off of it. And this is how I trade. These are the setups that I personally look for in the strategy that I look for. We're going to hop into some real examples in a second here, but in all simplicity, this is literally all I look for. I'm looking for these support and resistance zones, and then I'm waiting for price to break out of those support or resistance zones and then come back down to retest it. And right at this area, I'm buying because I know that once price breaks out of these resistance zones, it's going to break above it, come back down to retest it, and I can buy off of this previous resistance zone that's now acting as a support zone. All right, so let me now show you guys some actual examples that you can see on the chart. Let's first, before we do that, let's go over what this strategy is and what do we do? What are the steps for it? So the first step is to find a 1 hour or 4 hour support or resistance zone. So we're going to go on the 1 hour time frame or the 4 hour time frame, and we're going to draw out those lower lows, lower highs, higher lows. We're going to draw those out so we see it on our charts. Next is we're going to wait for the breakouts above/below them, because remember, we're waiting for our resistance zones to get broken above, then come back down to get retested to be treated as support, and then vice versa with support zones being treated as resistance zones when it's broken out of. So we're waiting for breaks above those areas. Then we're going to go down to the 1 minute time frame, because that's what we actually enter on. We don't enter our trades on the 1 hour time frame. We enter on the 1 minute time frame, which allows us to get in our trades early, allowing us to make even more money. And then when we're on the 1 minute time frame, and I'm going to show you all this on the real charts, when we're on the 1 minute time frame, we're waiting for a change of direction. So in this instance, right, let's say we have our resistance zone right here, and price has been respecting it, then it breaks above it, it comes back down into our previous resistance zone. We want to make sure that it's actually going to bounce off here, because sometimes it could sell through. Sometimes it won't bounce off of here and we would lose the trade. So we want to see price actually reject off of here. Remember, I showed you guys that price never just goes straight up or straight down. So while price is coming down to retest our previous resistance zone, it's making these lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. We want, as soon as price gets into our zone, we want that to switch and price to start making higher highs and higher lows. That's what we want. As soon as we see price starting to make those higher highs and higher lows, we're entering into the trade. And that's what I mean by wait for change of direction. So wait for change of direction from price creating lower lows and lower highs to then switching and creating higher highs and higher lows. And then vice versa with sells, where we'd look for when price is buying up into our support zone. Imagine this is our support zone. After it broke below it, we want this to be treated as a resistance zone. So we were making higher highs and higher lows. we want price to tap into it and start making lower lows, lower highs. And that's when we'd enter, that messed up. That's when we enter into the trade. So that's what we're waiting for. And then we're going to enter the trade and we're going to put our stop loss. Stop loss is simply mitigating our risk. It's basically saying, okay, if price gets down here, get me out of the trade. I'll just take my losses, because if it gets down here, I was wrong about the trade. Stop losses are very, very important. But we always put our stop loss below the recent swing low or recent swing high, the recent lower low or recent higher high, depending if you entered buys or sells. And then we're always going to make our take profit, which is an automatic trade that will get us out of the trade at a certain amount in profit. We're going to target a recent high point, right? And that's simply the trade. Now let's break down a real life example of this, a trade that I actually took. So we are on the hourly time frame. I'm going to walk you guys through it step by step. We're on the hourly time frame. We see we have a resistance zone here because we got to this area and price sold down. So we'd mark this off as a resistance area. Next, we need price to break above it. As you see, we have price breaking above it right here. So once we have that, we're then going to go down to the 1 minute time frame and wait for price to actually come back down to test that area. Now, keep in mind, I only trade this strategy, and I just noticed this. This is the 6 o'clock candlestick. I only trade this strategy between the hours of 8 a.m. Central Standard Time until 11 a.m. Central Standard Time. I don't trade outside that range because most of the time the trades end up losing, so I stay in that range. So this is the 7 o'clock candlestick. The 8 o'clock candlestick will be coming next. So I'll go down to the 1 minute time frame. We're now above our previous resistance zone. Now I'm simply waiting for price to come back down and look for that change of direction to buy off of it. So we'll go to the 1 minute time frame and we're simply going to wait for price to come back down into this area. So price is coming down. As you see, we're making a high here. We end up making a low here. We made a higher or lower high right here. Then we continue to consolidate in this area. Consolidate basically just means that we're staying in a range. As you see, we're staying in a range right here. And then we continued going down. Now let's see, fast forward and see what ends up happening. So you see, we then created another lower high right here. So we had a high right here. Then we had a lower high right here. Now let's see what price ends up doing. We ended up not creating a new higher high. So we wouldn't have entered this trade just yet because we didn't have price break above our next lower high. We'd now look at if price breaks above this high point right here, we'd actually look to enter it, because if price breaks above this high, we know we're making higher highs, because this was the first high, this is the second high, this is the third high. So if we break above this third high, we should enter into the trade, because that means the market is shifting. We already had price tap into our zone. So now we're waiting for an entry. We actually made another lower high right here. Let's see what happens. So we're still going down. We haven't broken any of our recent highs. Still going down. And now we broke above our recent swing high. We could have gotten in right here as well at a break of this recent swing high as well. But let's say we hopped in on this trade right here. Simply all we do is enter right here. We'd have our stop loss below the recent swing low from when we entered. So the recent swing low from when we entered is all the way down here. So marking up these lows for you guys again so you see it. We have lows here, we have a low right here, we have another low right here. And then on this entry, we have another low that was created right here. So we're putting our stop loss, which is, remember, that's that order that will take us out automatically when price hits a certain point, because if price comes back down here, we're probably wrong and we want to cut our losses before we lose too much. So we put our losses below our recent swing low, and we can target recent swing highs. So we can target here, we can target up here as well. We can even scroll out and maybe try and target another recent swing high. So we have another recent swing high up here. We could do that. It's really up to you and how much you want to be able to hold, or how long you want to be able to hold your trade. So we would have entered the trade right at that point, right above that recent swing high. Let's see what price did. Price continued to go up, and it would have hit our full take profit, and this would have made us some good money. This trade actually, if we look right here next to risk to reward ratio, it's 3.54. That simply means that for every dollar that we risked, we made $3.54. So if you risked $1,000, you made $3,540. If you risked $100, you made $354. That's simply what that means. But that is the trade. That's exactly what we just went over. By waiting for our break of a recent resistance zone, then price to go above it, then come back down to retest it, waiting for a change of direction, entering when price changed direction, and profiting off of it. Let's go into a couple more examples. All right, so in this example, you see we have a resistance zone right here. We'd mark this off because we saw price sold down here. Then we had price break above it. Now it came and retested it already, but this is at 2 o'clock in the morning. I don't trade at that time. This right here is at 8 o'clock in the morning. So once it's at 8 o'clock in the morning, like I said, that's the time when I'd actually start looking for trades. I'd go down to the 1 minute time frame, and I'm looking for my change of direction at this point. So we have a high point right here. This is the most recent high point. So now we're looking to see if we make a new high point. A new high, I should say. So we didn't make a new high, but we did make this area right here. We made a lower high right here. So this would then be our entry. If we're able to get price to break above this recent high, we would enter into the trade because that's price changing directions. So let's see what happened. So we ended up breaking above this recent high. We could have entered the trade right here. We would have put our stops below this recent swing low, and we could have targeted up here. We could have targeted up here. We could have targeted up here. It really depends how long you want to hold the trade. And let's see what ends up happening. As you see, price continues to go up, and we would have been able to make money no matter where we ended up targeting for the most part. As you see, we have price going all the way up here. And if we had held our trade all the way up until this recent high point right here, we would have been able to make money. This is what our trade would have looked like. We would have entered here. We would have put our stops below the recent swing low, and we would have targeted this area right here, and we would have made money. Now, it's the same thing over and over again. This strategy will work on anything, no matter what you're trading. If you want to trade stocks, if you want to trade futures, which is what I trade majority of the time. If you want to trade crypto, this strategy will work. It's a simple step-by-step process. Going to the hourly time frame, finding your resistance zone or your support zone, waiting for price to break above it, then waiting for price to come back down to retest it, waiting for that change of direction, and entering on that change of direction. That simple strategy has printed me millions of dollars with day trading, and has helped other students of mine been able to become consistently profitable. Okay, so now that you have one of my proven strategies, let me show you how you can actually use it to make $10,000 to $50,000 a month using just a few $100s. And I'm not exaggerating at all. So there are these things called prop firms. If you've never heard of them, think of prop firms like trading partners. You basically pay a small fee, let's say $500, and you prove to that prop firm that you can trade, and in turn, they give you access to large amounts of capital, $25,000, $50,000, even more than $100,000. And then you'll trade that capital using your skills, using your strategy. And as you make money, you keep a big chunk of the profits, usually around 80 to 90%. And then if you lose money, you actually are not losing any of your own money, and you don't owe the prop firm anything because you're trading with their money. Now, for example, let's imagine you've been practicing trading for a few months, and instead of saving up $10,000 of your own money to trade with, you take just $500. And that $500 buys you a $100,000 funded account. That $500 is basically just like your entry fee to get the prop firm. Now, if you make money on that account while keeping your losses under control, usually on a $100,000 account, prop firms require you to not lose more than $4,000 of it before they'll require you to pay a fee to reset it. So if you do that and you stick to your plan and you stay consistent with your trading, you now have a chance to make consistent income without utilizing any of your own money or your life savings. Because with that $100,000, you can obviously make drastic amounts of money. There are people using $100,000 accounts and making $20,000, $30,000, $50,000 every single month using these prop firm accounts. Now, utilizing prop firms has completely changed the way that I trade because I'm no longer risking my own money. I'm not risking my life savings or my rent money anymore. With prop firms, I'm literally using other people's money to scale up my trading. It also very much limits my personal downside because I know out of pocket, I only paid $500 for this $100,000 account. I didn't put $100,000 of my own money in here. I'm simply using a very, very small amount of money to leverage and use a bigger account to make a large amount of money. And this isn't something that's completely made up. Prop firms are 100% legit. And you can see right here on the screen that I literally made $18,000 in one prop firm in just 1 week. And that's $18,000 that's deposited straight into my bank account. It's actual real money. $18,000 in 1 week is pretty good if you ask me. Now, I'm going to be honest with you guys. There's obviously a downside to prop firms. There's another aspect of it. And that downside of that other aspect is that most prop firms make you jump through hoops by making you basically prove to them that you can trade by passing these challenges. They'll make you pass these trading challenges by meeting time limits. You have to pass these crazy rules and jump through a bunch of different hoops. And they honestly just make it almost impossible to get actual funding, because remember, you're paying that $500 to take that challenge to then get that $100,000 once you prove to them that you actually can trade. And then when you pass, they give you rules so tight that it's almost impossible that once you get funded, once you pass their challenge and prove that you can trade, once you get funded, it's almost impossible to keep the account long enough to actually get payouts from it and actually make money from it. I hated that, and I personally tried dozens of different prop firms, and no matter the name, they all had the same tricks and gimmicks. I felt like they were built to make money off of traders by making them pay those fees and not actually helping them. So I decided to build my own firm and do things differently. My prop firm, the Edge Funder, actually gives you instant funding, which means we have no challenge phases where you have to prove to us that you can actually trade. There's no jumping through unrealistic hoops to get funded. There's no hidden fees. And we actually equipped you with the information to help you succeed as a trader, because this is a prop firm created by a trader for traders. Basically, you buy your account and you can start making profits and start withdrawing your profits after just 7 days. It's that simple. I can honestly give you a real example here how funded accounts can drastically help you. Let's say you have a $100,000 account, and using the strategy that we just went over, and my stats have shown that with this strategy, you will have a 60% win rate with a 2.5 risk to reward average trade, which, if you guys remember what we just went over, risk to reward simply means if you risk $500 and you have a 2-to-1 risk to reward ratio, you're going to make $1,000. You're basically making 2 times whatever you risked. But in this instance, with my strategy, on average, you're making 2.5 times the amount of money that you risk. So let's say you're using this strategy with a $100,000 funded account that you bought for $500. And let's say you take 40 trades out of the month, which comes out to 1 or 2 trades a day. So in total, with a 60% win rate, let's say you take in 40 trades, you would have had 24 wins and 16 losses. Now, 24 wins comes out to $1,250 that you would have profited every single time you win a trade, because remember, we're risking $500 and we're always having a 2-to-1 risk to reward ratio. So you'd have 24 wins and you would have profited $1,250 with those wins. So in total, you would have made $30,000, but we did lose. We lost 16 times, and every time we lose, remember, we're risking $500 per trade. So every time we lose, we're actually losing $500. So 500 times 16 comes out to $8,000. So then we subtract our winning trades by our losing trades, and our total profit comes out to $22,000. Now, I mentioned to you guys that with prop firms, you get to keep a high percentage of it. So let's say you keep 90%, and that's your cut, your split. You take home $19,800 from that one funded account that you paid $500 for. That's it. And honestly, this is how you scale. And this is what most traders never get the chance to do, because a lot of traders don't even know that this world of prop firms exists. Now, because you've clicked on this video and you've actually made it this far into the video, I can tell you're actually serious about trading. So what I'm going to do for you guys, I'm going to give you guys a 20% off discount code. You can use code START20. And you can use that at my prop firm, the Edge Funder, and you can get yourself a funded account. No matter if it's a 25K account, 50K account, 100K account, we even have $150,000 accounts. So use that code START20 and you'll get 20% off. I'll leave a link for the Edge Funder inside the description down below so you can get yourself some funding. Now you understand what trading is. You have my insanely easy yet profitable strategy. You now understand how you can trade with little money out of your pocket. Now you need to understand the do-nots of trading, the things that will hold you back. And what I see over the years of me teaching tens of thousands of people how to trade, the same pitfalls that I see people have. And one of the main pitfalls is that they try and do too much. You'll see this video, you'll see the strategy, you'll see it works, but then you'll have one losing day and you'll end up looking for a whole new strategy. Or you'll end up having one losing day and you just feel like quitting, or you just get too emotional, and being too emotional when it comes to trading is going to make sure that you're never profitable and you never make money. So a couple tips that I want to give you guys and you guys need to focus on is to stick with one strategy. Don't go strategy to strategy. I don't care if you have a losing day. I don't care if you have a losing week. Stick with the strategy. The next thing is to trade one thing. Don't try and trade every crypto. Don't try and trade every stock, every futures pair. Stick to one ticker. Ticker simply means like a stock or a crypto. Stick to one thing and only trade that. That way you don't get confused. The next thing is to make sure that you're journaling and writing down all of your trades. Keep track of every trade that you take. That way you know what you should do and what you shouldn't do, because you'll start seeing patterns in your winning trades and your losing trades, and that'll help you become a better trader overall. Like I told you guys before, I trade from 8 a.m. to 11 a.m. You need to stay focused and actually treat this as if it's a business and not some side hobby. That's what separates consistently profitable traders like myself with people who consistently lose money in the markets and never succeed as day traders. So now you've learned exactly what day trading is, how it works, how the market really moves. You've also learned my #1 strategy that I use every day to generate over $1 million a year. And you also learn how you can use that same exact strategy partnered up with prop firms to generate $10,000, $20,000, $30,000 a month with just $500. Now, if you're serious about taking this to the next level, I want to personally invite you to my inner circle. My inner circle is where I work hands-on with my traders. Inside, you get all of my strategies. Every single strategy that I use every single day to day trade, you get step-by-step details on how to actually use that strategy, because sometimes different personalities work with different strategies. So you need to be aware of which one works best for yourself. And in my inner circle, you get access to every strategy that I use. You also get live trade breakdowns with me, so you can actually see how I trade live and in real time, and even follow the same exact trades that I take every single day. You also get access to a private Discord community full of my other extremely profitable day trading coaches. It also has like-minded traders in there. You get to be in a community of people who are making it and winning it inside day trading. Now, I'll be the first to tell you, when it comes to trading, it's 80% psychology. It's 80% mental. It's a mental game. It's not reading charts. It's being able to master your mental. And that's why in my inner circle, you also get access to our dedicated trading psychologists who will make sure that you are staying mentally in control. Being part of my inner circle, you also get trade review feedback, which basically means if you take a trade, you can send the trade to me or my other coaches inside of my inner circle, and you can get personalized help to help you become a better trader. My inner circle is literally built to take traders from zero to consistently profitable, whether you've never taken a trade at all or you're trying to scale how much money you're currently making with trading. So if you're done guessing and you're done losing money and you're ready to build this like a true consistent business, click the link down below and apply to join my inner circle. And let's make this year the year you become the trader you always wanted to be. I'll see you inside.